webinar on digitalizing investment banking operations. I'm Jonathan Guthrie from the Lex column of the Financial Times. Our focus will be on using technology to boost efficiency and competitiveness. Our sponsor is Williams Lea, provider of business-critical support services to financial, legal, and professional services firms. Our aim today is to provide you with an invigorating 50 minutes of discussion and debate. Investment banking is a complex and varied discipline, spanning everything from the creation of fresh equity capital to the trading and settlement of complex derivatives. It is awash with data. As the heavy financing activity of the last 2 years abates, banks are under pressure to make better competitive use of that data. We have a distinguished panel here for you today. Clare Hart is CEO of Williams Lea. She has a long history of leading data-heavy businesses, from Sterling Talent Solutions to Dow Jones Enterprise and Factiva. Marnix van Stiphout is COO CTO and a management board member of ING. He's got a bird's eye view of activities in the Netherlands' largest bank, active in 40 countries. And we have Stuart Riley, Global Head of Technology in the Institutional Clients Group at Citi. He led the development and adoption of the Citi Velocity Suite. Among other things, this showcases Citi's excellent securities and economic research. So if you're in the audience, please use the chat function to ask any questions that occur to you as we go along. I'll try to spring those on panel members at the time or pose them at the end when we should have some time for Q&A. And I'm going to stick to 4 talking points, but panelists should feel free to diverge onto areas they think are interesting as we go along, and also to provide some takeaways that delegates can use in their everyday work. So just to start with you, Clare, on the question of economic and industry challenges, what have been the operational difficulties in the current and economic and market environment? Which areas of the investment banking business have been most affected and how?
Well, thank you for the introduction, Jonathan. It's great to be here. From a Williams Lea perspective, we're seeing the economic uncertainty and market volatility around return to office requirements, real estate, office space allocation, and we're seeing our clients looking to build more flexible and scalable support services. For example, after 2.5 years of working hybrid and fully remote, investment banking clients are reevaluating office space, how it's used, looking at it being more of a collaboration and community environment than people just going into the offices. And with this, they're asking a lot of questions. Does all of the work that had traditionally been done in our offices, must it remain in the offices, most of which are in the most expensive cities and the most expensive real estate in the world? So for example, we're seeing a lot of clients look at outsourcing secretarial and administration functions. Partially that's because of office space and their interest in consolidating space or just using it differently, more as collaboration environments. But it's also because of the Great Resignation. A lot of people who were in secretarial or administrative support roles who used to come into London or New York are looking at it and saying, I don't want to commute anymore. So the combination of people wanting to leave the workforce and then looking at outsourced services like Williams Lea can offer with the expertise and the experience and sharing best practices across clients. And probably the 2 biggest areas in banking are administrative support and then the pitch book creation and the business information services teams. So just can we outsource that and enjoy the benefits of scale that a company like Williams Lea has, the benefits of the technology that we apply to these services. So as difficult as the pandemic has been, I can say for a company like Williams Lea, it's actually, there's an upside because banks and law firms and professional services firms are just looking at efficiency, quality above all, turnaround times, and then can I, on top of all that, get cost savings?
Well, Marnix, at ING, you have a large and complex operation, and you've been through quite a remarkable journey over the last couple of years, 2-3 years, with a big pandemic, which has had everybody in a very large organization working from home, a partial return to the office, and now on the client side, you're going from a period of heavy financing to one of quite a lot of uncertainty about things like credit quality as a result of the energy crisis in Europe. What are the ways in which data can help you with dealing with that operationally?
Yeah, Jonathan, thanks for the question. I maybe first I want to come back to what Claire said, because what she describes as being very good for the company she works with, it's also happening on our side. So in terms of the consolidation of work in technology and operations in a couple of hubs around the world within ING, it's really taken off over the last couple of years, and the pandemic has really kind of made it more powerful even than the years before. So that allows us, when it comes down to coming up with new solutions, to really leverage those locations where we put technology and operations people a lot closer together, servicing the global environment of ING, which is a massive development and a big opportunity for us. And then back to your question, there's been that investment in getting those qualities and those capabilities joined up and consolidated in those hubs, and at the same time, technology-wise, there's been a lot of effort, not just with us clearly, but with across the industry, to consolidate our data. There's been big investments to go into data lake structures, so that when it's not just in trading, but across the bank, across the wholesale bank, but also of course the retail bank, consolidating our data, making it normalize that data, and being able to use that in a standard way for ourselves and for our clients, in digital channels, in trading solutions, etc. So big investments. I dare to say already good yields on a lot of this work, but still a lot further to go, and also a lot further to go in the consolidated solutions, especially for example in post-trade across Europe, where this needs to go a lot further than us individually at ING or other banks making an effort towards further digitalization.
And Stuart, perhaps you could just tell us a little bit about the Velocity product. I mean, I'm familiar with it as somebody who's fortunate enough to receive your excellent research, which is on that platform. But you sent me an interesting piece about its broader application, which can be, I believe, very transactional, down to things like mobile securities trading. What was your experience of that product over the pandemic? Did you manage to get much higher uptake, and how much of that, if so, how much of that uptake has stuck?
Yeah, so actually linking back to the earlier question as well, one of the challenges I think we certainly face at Citi is dealing with the scale of the transaction environment that we now see. So post the pandemic, we've seen a lot more go digital, and as things have gone digital, they typically go to a lower transaction sizes, but higher volume of transaction. And that's almost universal through all of our businesses. And of course, the current increased volatility in the market is only making that truer. And so when you think about how you build those businesses to cope with that sort of scale, we've got to levels now where if we were relying on our front office staff like trading and sales, or our product people in payments, to capture those transactions from our clients, there's just no way we would ever have enough humans to take in that quantity of business. And so almost through necessity, we had to think about digital storefronts and products that brought that business to us in a digital way. What we really realized through doing that is that we need to make it easy for our customers. We need to give them a consolidated storefront, somewhere they can access the firm's capabilities and easily navigate that. So Citi Velocity, that started some 11 or 12 years ago, really as a piece of infrastructure for our markets business to distribute research, has now become something that goes from pre-trade to post-trade, and all the way through that cycle across all of our businesses in the institutional client group. So there's pretty much nothing that doesn't have a digital storefront in that store now. And you're leading back to some of the things that Martin said about data. One of the real benefits of capturing every transaction digitally really early on in the cycle is the quality of your data is better, because you're not rekeying it, you're not having to transform it from one place to another. It comes in digital and it flows through the whole of our infrastructure digitally. So that's what Velocity is really about now. It's about giving our customers
I think we've lost Stuart. I'm sure that we will try and get him back again. We have technical people who will be working on that right now, and we'll pick up where we left off with him. But it did occur to me, actually, while we're on the subject of the pandemic, Clare, I wondered if you could talk a little bit to the question of pitches and marketing. What we'll do, sorry, so we've got Stuart back again. So if we could just go to that question about pitch books and marketing after Stuart has just finished his description of how Velocity works.
Yeah, my apologies. I hope you got most of that. But I was just saying at the end, the Velocity product really is now just a single place for customers to access whatever they need from us digitally. And the idea being that there's a full service there. So all of our products and services are offered in one place.
And I just a quick supplementary question. How does it compare with what is on offer from other investment banks? Do they have similar platforms, or are they more fragmented?
Yeah, I think, look, I'm probably biased, of course, from my perspective, but I think what Citi's done is brought it into a more uniform package, put it into a single point of entry. I think, most of our competitors have platforms that are very much at the product level rather than at the institutional level. And that's one of the things we've been trying to change is offering these services from the viewpoint of the customer, not from the viewpoint of the organization that's offering them. So forgetting about our organizational structure and more how does the customer consume those things. And I think that's where our product looks more comprehensive, because we've packaged it into fewer places. Very good.
Well, just to go to Clare on the question of pitch books and marketing of deals, this is particularly on the origination side, and we all know how that used to work before the pandemic, is that you go to see, or rather probably the investment bank would come to see you, the investor. They would bring the executives from the business that was doing the capital raising, who would give you a general pitch. Pitch books, pretty straightforward sort of product historically, little bit about the business, gives you some sense of who they are. Then it digs down more into the financials, looks at the development of profits and what the outlook would be based on what already, for example, quoted peers would be doing. I suppose that must have all changed, because suddenly pitching needed to be done virtually, and that probably created an opportunity for some much more eloquent use of data, graphics, those kinds of things. Tell us a little bit about that, and also how much of that is stuck as we've gone back into a face-to-face environment for doing business in investment banking.
It's been amazing. I think after the initial lull in all of business in March of 2020, things started picking up rapidly in April of 2020 and really hadn't slowed down until earlier this year in 2022. And what that meant for us is our teams who are creating pitch books, and look, just for those of you who don't know us well, we produce millions of PowerPoint slides for global investment banks every year. And so what we're always looking for is, what the client's always looking for is creativity. Above all, they have to be of high quality, and then turnaround time. The bankers need the information as quickly as possible. So we're looking at technology and automation to aid pitch book creation. So we've invested in creating numerous macros within PowerPoint. Sounds very basic, but just getting these macros to do the work for us so that the associates don't spend time creating templates and doing some basic work within pitch books. And then one thing that consumes a lot of associates' time is building tombstone slides for a pitch book. So what deals has this bank done, and ensuring that the company logos that are in the pitch book or in the tombstone are of the highest resolution, and they're the most current logo for that company. And often we could have associates working on finding, doing a search for that logo, and then making sure it's of high quality resolution. We could have associates sitting down the hall from one another going after the same logo. So we've created a logo database where we're enabling our associates to efficiently go in and get access to highest quality logos and the most current logos. This improves quality, obviously, for the pitch book, and turnaround time, because we're able to do things more quickly. The macros, obviously, whatever they may be, that drives efficiency. And then one other thing that is interesting in banking and in our other client bases, professional services and legal, is a service line that's grown significantly is our digital mail service. So that's converting physical mail into digital mail to distribute it to recipients, regardless of whether they're working virtually or in the office. And all of our technology sits on a platform called Engage, which is our digital client platform, which is a workflow tool. Think of it as a workflow tool, a data warehouse, and a reporting dashboard. And we're adding more and more automation to this platform so that we can get request intakes automated. We can speed up the process of distributing work through knowing skill sets that are available and allocating the work depending on skill set and availability. So it's incremental, Jonathan, but every bit of it is, with the macro view of how do I make sure I'm driving the highest quality, fastest turnaround time for a very demanding audience. And that level of demand, while it may have slowed down a little as M&A has slowed down, the requirements have not changed. If anything, they're just higher.
No, well, I mean, what you're talking about in a way is marginal improvements of performance, which if you have a lot of those, they start to add up. And in some parts of investment banking, it sort of has been a highly paid cottage industry in a way. And as you describe it, associates quite often doing the same operations over and over again, which could be automated, because that's always been the way. And curiously, this is a journey which factories and manufacturing industry has been on for the last 20 or 30 years, which is around, for example, why is a forklift truck going 2 miles around the outside of a building when you could actually make a track for it just to go through the middle and save 3/4 of the time. So we have a focus here on efficiency, I guess, and that brings me on to our second talking point, which is dealing with difficulties. And there we're going to discuss how COOs and CTOs can respond and what digital tools they can use, what sorts of artificial intelligence and automation is useful. And I was going to approach that talking point with a question from the audience. Mike asks, what is the greatest challenge of digitizing investment banking operations? I was going to put that question to Marnix, because it seemed to me in our prep call that what you were saying is there are some areas of investment banking where there are some very big returns are possible in terms of digitalization and things like AI, then there are other parts where maybe the gains are more incremental. I wondered if you could talk to that for a moment.
Yeah, of course. But let me start by saying I think the most important thing is that over the last 10 or 15 years, or however many years before the pandemic especially, I think we have just been paying a bit of lip service to automation and digitalization in banking full stop, and especially probably in wholesale banking and investment banking. I think there wasn't a great deal of attention to operational excellence. And of course, people can now argue, yes, but look at some of the markets which are really STP. Yes, true. But in terms of how we as banks have responded to our clients' requirements, I think we have been, not very complete, let's put it that way. And I'm still being nice, I think. So most important is, I think at this stage, to recognize that and to really make sure that we allocate the right capabilities and money towards making those changes. So I think that's where really, at least speaking now for ING, we have started to make some real choices. And then in terms of where does it really make a difference? Well, there are many areas where it really makes a difference. I think if I look at post-trade in markets, there's still a lot further to go in many asset classes. If you look at, it's not directly or not fully related, but if you look at what Finality tries to do, as probably people have heard of in terms of the cross-border currency markets across the world, starting actually probably in the UK, I think that's very interesting for us banks, but also for our clients ultimately, but also in the way we clear and settle across, especially in Europe. It's still very fragmented. There's still a lot further to go. I think what Target 2 promised to do hasn't really come about, and there's still a lot further to go again on that front. The other point I probably want to raise is, if you look at, and it's not directly investment banking, it's certainly wholesale banking, the structured finance products in lending, in contracts, for example, smart contracts and those kind of things, still a lot of work is already taking place, and it's still a lot further to go. So I think actually, all the way down to payments, massive opportunities, and also coming back maybe to what Stuart said earlier, the way we can today interact with our clients when it comes down to cash management, how clients can directly do this even from mobile, is very different today from what it was a couple of years ago. And I think, by the way, in that space, the market has advanced a lot more than, for example, in lending. So a bit of all over the shop, you could argue, my response is, but that means there is a lot to do across different asset classes. One is further than the other.
Right. And you mentioned a product called Finality, I think. Is that right?
Well, Finality is a collaboration between quite a large set of banks across Europe, especially, but also the US, and market infrastructures, by the way, who are trying to tokenize currency settlements, and that's I think it's a very good example, and we need to see how far it can go. But it's a very good example of how the new technologies can actually help us to really change the market infrastructures. In this case, in currency, but also in other asset classes. Securities is clearly another one that's ripe to apply this technology. So I wouldn't be surprised over the next 5 to 10 years that some of these markets in Europe, and not just in Europe, and I'm speaking from a European base here, will adopt these new opportunities.
Right. I see. Okay. And is this a Solana-based solution of some sort, or what's the underlying technology for the tokens, or is it something that's bespoke to the project?
No, it's just the blockchain technology that we're using, that Finality is using to basically get this in place. It's a complex venture, but it's standard technology towards a very big international currency market.
And perhaps, Stuart, you could tell us a little bit about with Velocity. Was that entirely produced in-house, or did you use an external vendor? Did you have external vendors feeding into that process? Because this was presumably in some ways quite a nightmarish project, because you have a lot of departments that have their own ways of doing things and sometimes their own systems, and you're trying presumably to coordinate them to use the same structures.
Yeah. Actually, in some ways, it's a hard question to answer whether it was in-house or external, because ultimately it becomes a mix, because the storefront itself was very in-house, but the storefront is only a storefront, and it's all the products that it connects to that adds the complexity and differentiates it. So when you start to look at all of the different products behind it, there's very much a mixture of in-house capabilities and vendor supplied capabilities, and increasingly, as Marnix talks about Finality, many partner companies that we work with to provide pieces of that overall flow. So it really is a mixed bag, and obviously the way we look at that is whether the provider providing something brings something that we on our own can't deliver. So when you think about something that requires a network or requires many participants, then that's not something we could build alone or would make sense to build alone. And the other angle of there is, how much do we value owning the IP? How important is it to our overall offering? If it's really important, we tend to build it in-house. For other components that we see less as a competitive advantage, we want to standardize to the industry and drive the industry to, more common platforms where we benefit from scale together. And Marnix mentioned, SDP rates, and that's a way in which we can better achieve SDP across the industry by aligning to certain technologies or aligning to certain platforms that really help kind of kickstart, bootstrap us all getting together and doing something in a more common way. One thing I would add to Marnix's comment, if you don't mind, around us not being particularly good at SDP in the industry. I know you didn't quite say that, but I would agree, and I would agree with that. But I would just point out a couple of things that I think. There has been a lot of effort that have got into it, and a lot of false starts. And for many years, the banks were focused on things like RPA technologies, robotic process automation. And I think most of those projects had a really poor return on investment. Lots of added complexity to the industry. Very little cost was taken out, particularly when you take into account the technology investment that was made. And in my mind, it's because we never look at these processes truly front to back. We look at a part of the process and we try and fix a part of it rather than stepping back and actually modeling the whole process. And we've been very successful internally starting to do that. And a tool we've been using is Celonis, and it's a process mapping tool that really allows us to trace our data as it goes through the company and understand where does it really flow, who intervenes with it as it flows, like who's actually touching that data, where does it get updated. And it's really eye-opening when you see how many times a particular transaction might be touched in its life cycle. And when you've got that data, you can start to become much more informed about how you fix it.
That is fascinating. That sounds like really useful technology. And the problem you've described, I guess, is of the displacement of effort by an initiative in one place which improves efficiency, displaces effort somewhere else potentially. Yeah. But the your process mapping tool sounds like it helps you to spot that.
Absolutely. I mean, that's exactly what I'm describing. We sort of chase savings in one area, but you don't know where you've pushed the cost. And so you need to be able to look at these whole processes to understand what's really happening, whether the net of it is coming down, and spot things that just an individual who is part of that process doesn't know is happening in the process. And by becoming more informed, you can sort of really redesign it. And that's where I think the industry starts to have its eyes open to where our real inefficiencies are. And that's where I think we'll get together a lot more, because we'll realize we're all inefficient in the same place and it's doing no one any good.
Yes.
And maybe, Jonathan, if I can add, I totally agree with you, Stuart. And as you kind of reinforcing my point, I think, because Celonis, Pega, as they're focusing on our workflows, is a lot more mundane work than previously we did on big technology implementations. And I think that's what's really come down to us through the pandemic, or not just through the pandemic, certainly over the last couple of years. There's really process-oriented automation that we need to focus on in these institutions, and not very fancy, but very, very good yields on them. So totally agree.
Yeah. Good. Well, Clare, we've jumped ahead a little in our talking points, because we really have been talking for the last few minutes about what you should keep in-house and what you should outsource. And you, of course, are on the outsourcing side of the equation. You have particularly administrative support for bankers and lawyers. And I wondered how you advise them when people come to you and they're interested in the service. You obviously don't want them to buy into it if it's not going to work for them. Are there particular functions that these work for? Are there, for example, particular sizes of organization that need an outsourcing solution, but if, for example, you're a large global investment bank, you might not. What's your take on that?
It's actually interesting because years ago, it might have been just large global investment banks that were using our pitch book services, our presentation and creative services. Now it is across the largest investment banks, mid-tier banks, private equity firms. So it's really people just looking at outsourcing something to a company they can trust. We have excellent net promoter scores. We have a good reputation in the industries. So they can trust us. And this is something, if they don't have to do all the recruiting, onboarding, training, et cetera, they can outsource that to us. They focus on the bankers, the lawyers, the talent that they're best known for. So pitch book and presentation and creative can absolutely be outsourced across the board. Secretarial and administrative support, Jonathan, what we counsel our clients to do is crawl, walk, run. Don't try to take the secretarial and administrative support away from the senior bankers or the rainmakers or the partners at the law firm. Start with the junior bankers, start with the first years. Assign some of the secretarial assignments that a senior secretary might be doing today, but that could easily be outsourced to us. So it's kind of a multi-tier approach, and it's managed with care because the least amount of disruption to the bank or the law firm or professional services firm is the most important ingredient to success. You can't come in and pull the rug out. You must go in and guide people gently through turning over certain secretarial and administrative support. It could be expense accounting. We just handle the expense accounting. We check it against the guidelines of the bank or the law firm. So that's easy to outsource, easy to audit, easy to check. And then the final thing that we're now seeing, which is interesting, is we've seen it in the past, but it's coming back now, and I think it's for economic reasons. But banks often have legal departments that are as large as medium-sized law firms.
Yes.
And so we're finding that the skills and the talent that we bring to bear on document processing and all of the work associated with business support and administrative support in the legal department within banks, that's another area where people are looking at outsourcing. So the rule I think people use is, if it's not the most strategic workflow or process within the organization, and there's a trustworthy source to whom you can outsource it, outsource it. So those would be the three areas: legal department, secretarial, and pitch book.
Yes. Marnix, I also wondered while we were talking there a little bit about other kinds of partnerships. We've been talking about partnerships between investment banks and outsourcing organizations, businesses that exist purely to serve them. I wondered to what extent you get buy-in and help from the organizations that create the infrastructure, for example, the financial markets in things like settlement, things like trading. That's probably quite important. For example, in things like netting off collateral, if you have lots of information on collateral and you can net collateral between different clearinghouses, it saves substantial amounts of capital, but maybe is not the first priority of the organizations themselves. What's your experience been?
Well, I think that has improved quite a bit over the last couple of years. If you look at what Euroclear are doing or other FMIs in the market, there's a lot of new product coming out. So I dare to say, while the consolidation is really at a miserable level, the servicing and the product development is actually at a pretty good level today, I think. I mean, in terms of the speed by which new things that are really useful to us, collateral services, other things are coming out. I think it's a bit of a mixed bag if I need to respond to your question. And Jonathan, let me say, I'm positive about those products that are coming out and the way these market infrastructure players are responding to our needs and to our clients' needs. But the lack of integration is really a lot bigger an issue. So I think it's only a small token, this product development, versus what could happen in the industry if at the CSD level or at the clearing level things would come together. Look at DTCC in the US. There you really see the benefit of a single big player offering adjacent services in reporting and everything else. Things that in Europe are are not as easily done and not at the same level because of the fragmentation.
And that's fundamental, I suppose, to a range of different countries within the EU. Does there need to be some centralized action to fix that, or is that too much to hope for?
Well, I'm certainly not going to give up hope. I think it is something that needs to happen at some point. And of course, the ECB is trying, but they should try a bit harder, I think. And back to, for example, finality. If that's being adopted, or agreed and approved by the Bank of England, the ECB, maybe the Fed and others, these kind of things will really make this consolidation, I think, ultimately work.
Excellent. Well, it sounds like a very interesting project. I mean, the central banks do have the idea of blockchain-based technologies, I think, in their sights. They talk about it quite a lot, and they may even do something about it eventually. But I think there are probably one or two other minor issues that they're wrestling with at the moment, aren't there? In terms of solvency and the economic situation in Europe right now. I'm conscious of the time. We've got a little time for questions, and we have quite a few have popped up in the chat box. And Stuart has returned just in time to save the day, we hope, with the Q&A session. So I'm going to shoot some of those questions at you. I think we have pretty much covered the talking points, maybe not at a headline level, but we've certainly covered quite a lot of the subject areas. And the thing I was going to start with was really, what do you think is the greatest challenge of digitizing investment banking operations? So no big ask, simple, straightforward question. In a few words, who'd like to take that first? Stuart, perhaps.
Yeah, look, Jonathan, happy to. I have a sort of relatively simple view on why it's really hard. And it's really hard because when we think about investment banking, it sounds like it's one business or one set of products. The reality is it's hundreds of products. We offer something like 800 different products across those business. All of them operate entirely differently, different processes, different customer offerings, front to back is all different. And so when we talk about digitizing it, we're not digitizing one business, we're digitizing like 800 different businesses. And so it makes the return on investment really complicated because any one investment might not look like a great yield until you get enough of them done. And so to me, that's the big challenge, is that and ultimately why we end up with a lot of people, because we're offering an awful lot of products like Citi. And I know not all banks are structured this way now, but Citi is what we call a full service offering. So we offer every single financial service that institutional customer might want. And we offer that in like 100 countries in the world. So the scale of it is just really complicated. The thing to do, though, is to go through those products and simplify them. So it's not just about digitizing the product, but it's about simplifying the offering, getting rid of years and years of various permutations on the way that product's offered, so that we can offer one modern, clean representation of that product. Marnix mentioned payments earlier. It's a great example. We've got over 100 different ways you can make a payment across the company. But in reality, customers just want a payment made in very simple ways. They want their money to reach their destination, quickly and cheaply. So there's no need for so much complexity there. So I think we need to simplify our product set so that we can then, use standard processes everywhere we operate globally. And that's more than just technology. That is about process redesign. And at the same time as we redesign those processes, then yes, applying modern technologies to that final solution. But I think there's a lot to be done around sort of product simplification first.
Yes, I think also panelists, you will be too polite to say this, but as I'm a journalist, I maybe can get away with it. There's also institutional resistance to simplification and to digitization because people have created professions around having the skills to navigate rather complicated systems that have quite a lot of friction in them. Is that something you recognize, Clare?
Well, it's funny, Jonathan, I was going to ask the question specifically to Stuart and Marnix, because I think just generally change management is challenging. And when you go down the track that Stuart was going down with so many different products within the banner of investment banking, and my clients like it this way, and I have to do it this way for my clients, we see it just with the introduction of Engage, our digital client platform. And that's sort of a very confined area within the bank, within any organization that we're driving change. And when you're talking about changing many, many products underneath the banner of investment banking, I'd love to hear how do you define success in terms of the ingredients to drive that change?
Well, that's maybe one for Marnix as a chief transformation officer. What about the cultural
that's right,
side?
Marnix. That's your.
Yeah. So maybe just to pick this up where Stuart, I think, left it. So when it comes down to automation of processes, creating STP, it is really about, and I don't want to make it sound too easy, but about making choices and allocating, again, the right capabilities and money towards that work. And of course, there's a lot of vested interest in people that have been in these business for a long time. And it's not easy to change it, but still it's about those two things I just mentioned, I think. What we have done is, and we have actually gone to the market with this, we have created something as simple as a digital index for the bank, where we basically put across our retail and wholesale businesses, we have got approximately 350 of our most important client journeys, as we call them. And we have measured the STP rate on them, literally no touch, right? Let's be really binary on this. Either it's really STP or it isn't. And we have put targets on, well, first of all, focus and ambitions, and then targets on where we want to end up over the next couple of years. And maybe naively so, I truly believe that showing to everybody in ING what we want to achieve here and what needs to be done to achieve it, and allocating, again, the right people to it, and aligning those KPIs will make this happen. So I think there is no way around it anymore, at least not within ING, that these things need to happen. And this is not about the really kind of more difficult artificial intelligence thinking that we're doing across the industry. That needs a lot more other stuff to happen, including regulation and whatever else we've got. But when it comes down to automation, digitalization of our processes, I think, again, if you make the right choices, you put the right capabilities, and you package this up in the right KPIs, I think we can go a very long way. And that's what we have done here internally. And again, this index is published on a monthly basis. So we really track, we choose our journeys and we track what's the outcome. Simple, certainly not complete, but a big step for us towards more efficient operations across the bank, not least in wholesale.
Very good. Well, we have lots of questions. I'm going to, some of them we've sort of covered, I think, and things about outsourcing and how you incorporate product development, IT product development from in-house and also out of house. So I'm going to skip to a couple on AI, which I'm going to jam together into one omni question, which is, how are your clients? Sorry, wait a minute. No, here we go. So the question was, artificial intelligence is doing the work that investment bankers previously performed in some cases. Are jobs threatened by robots? Will there still be work for them in 2050? So perhaps a younger audience member who's a little anxious. And we also have some other questions about AI. One of them is, how prepared are financial services firms for increased regulatory focus in areas like artificial intelligence? And indeed, there is a problem sometimes in AI that it does things you don't really expect, and some of those are perhaps ones that would breach compliance codes. So just on AI, is it the end for human bankers, and are regulators going to have a go at banks over AI. Stuart, I'll turn to you on that one.
Yeah, actually, Jonathan, it's a timely question for me because I've just spent a time with two of our big US regulators going through pretty extensive piece of work actually on how we look at AI, how we manage the risks of AI and the whole framework around that. And so particularly our US regulators, but certainly not exclusively, spent a lot of time with us on that, and we took a number of actions in the firm. One of the things we focused a lot on is model risk management. So actually, as we come up with an artificial intelligence model, how are we governing that model? How are we assessing that model? How are we risk assessing that model? How are we testing that model? And actually, I think our regulators were certainly pretty comfortable and satisfied by how we thought about that. Now, what I would say is I think, as a firm, at least Citi takes a fairly conservative, safe view on how we think about AI and where we use it. We're probably a little bit on the conservative side because of some of the risks that we see associated. Nonetheless, we have hundreds of models that we are already actively deployed in production. And so, I think complex subject in terms of the risk assessment of it, but something that everybody does need to put through a framework and really understand how they are going to manage those models in their environment. With regards to the will it put an end to jobs? I mean, this is my personal view, is I don't see that in any time soon. If you look back on history, we've been automating things for many decades or possibly hundreds of years, depending on how you look at it. And actually, in most cases, it's created jobs rather than destroyed jobs. We continue to prosper. So I haven't seen a scenario, even in the banks, where we are using artificial intelligence to eliminate jobs per se. What we're really doing is using artificial intelligence to make people's jobs easier, to make them better informed, to take away manual work that isn't adding value to our customers. So I don't see a scenario in the near future where we see significant job elimination through artificial intelligence, but I do see a significant use of it to sort of better or improve the services that ultimately we deliver to our customer, whether we look at that through the lens of customer cycle time, like how quickly we resolve issues or how quickly we put products from request to completion, or probably more importantly, how we use data to better inform our customers about what's happening in their markets, and use that as a sort of value add service for them.
Great. Well, look, we're almost out of time, but please stick with us just for another couple of minutes. I was just going to try and sum up some of the points that have been made in our interesting discussion, which I hope some of which will be takeaways for you. I think Stuart made the point that if you're creating a platform, a front end, this is for clients. It is not for the business doers themselves. It will serve the organization better as a whole. So you need to get people to try and buy into that. Another point which came from Clare was that there is quite a lot of stuff that you can automate, even in the front end of deal origination, things like pitch books and so forth. And maybe if you're an associate and you're on this call, then you should perhaps be demonstrating some of this technology to senior members of staff. So perhaps you can get out a little bit earlier in the evening for a change. I think there was also a point that Marnix made actually in our prep call, which rather than just now, which is essentially that the more you can aggregate the data, the greater its usefulness. And I think that's something which has been demonstrated very nicely by tech groups, but it also applies in banking as well. Stuart, when he was discussing the creation of digital systems that you're trying to integrate to create something like a complicated platform, made the point that if you think this IP is going to be valuable, obviously you should create it yourself so you can control it and own it. And also process mapping tools can be very useful for seeing how data is moving through your organization and where it is creating efficiencies. Sometimes those are going to be displaced within the system. And finally, if you are outsourcing, gradualism works. This was what Clare suggested. You need to go at it in bite-sized chunks rather than creating a great cultural revolution in day one, which is probably going to have people reacting against you. So those are some of our thoughts. Thank you so much for joining us. You've been a great audience, very engaged, lots of questions. I'm sorry we haven't been able to answer all of them. So it only remains to me to thank our brilliant panelists, Clare Hart from Williams Lea, our sponsor, Marnix van Stiphout from ING, and Stuart Riley from Citi.
Yes.
Thank you.
Thank you, Jonathan.
Thank you.
Thank you.